Welcome back, everyone. Today, we've got an absolutely fascinating explainer lined up for you. We're looking at a massive shift happening right now in the global semiconductor landscape. If you've been watching the markets lately, you've probably noticed that several major securities firms are suddenly and aggressively raising their target prices for a tech giant we all know well, Samsung Electronics. So let's dive right into this and uncover exactly why analysts believe Samsung is on the verge of a true paradigm shift.
Quick note before we get into the data. We've created this analysis explainer based on recent securities reports specifically for our foreign investors. We really hope it helps with your investments. Please subscribe, like, and turn on notifications so you never miss an update from us.
All right, here is our roadmap for today. We're going to cover the historic valuation discount, HBM as the core catalyst, improving medium-term visibility, why product mix matters, and finally, future investment scenarios. Let's get to it.
Part 1, the historic valuation discount. Let's talk about what's been holding Samsung back.
To see where we're going, we kind of have to look in the rearview mirror first. You know how it usually goes. Historically, whenever Samsung posted stronger earnings, the broader market would just shrug and say, oh, it's just another memory upcycle. They just viewed it as riding a temporary wave. But today, the market is waking up to a totally different reality. They're seeing a true structural business transformation, and markets assign much higher valuations to sustainable growth than they do to temporary bumps.
So what caused that old, discounted view in the first place? Well, look at their historical baggage. Earnings were wildly volatile because they were completely chained to traditional memory pricing cycles. Plus, recently there were real worries about them being late to the AI memory party, and uncertainty around their competitiveness in high-bandwidth memory. Throw in some execution risks and losses in their foundry operations, alongside a perceived tech gap with leading rivals. And yeah, you can totally see why investors were playing it safe. But as you're about to see, that old narrative is actively being rewritten.
Which brings us to Part 2, HBM, the core catalyst. This is the absolute game changer.
So high bandwidth memory, or HBM. This is ultra-advanced, high-performance memory that is literally the lifeblood of AI server infrastructure. The whole AI boom has completely flipped memory demand on its head. It used to be all about commodity DRAM, right? Just pumping out massive volume. Not anymore. Now the real value drivers are AI server memory, advanced packaging, high-performance DRAM, and HBM is leading that charge. People previously thought Samsung was dragging its feet here, but recent reports are actually showing fantastic visibility, solid tech execution, and really strong customer engagement.
And the ripple effect of HBM? It is massive. We're not just talking about a simple bump in revenue. Because it's such advanced tech, it commands much higher average selling prices. That means a vastly better product mix, and boom, significant margin improvement. And you know what markets do when profit margins structurally improve? They give you multiple expansion. That means investors are suddenly willing to pay a much higher premium for the stock. This right here is exactly the launch pad for why those target prices are being upgraded.
Okay, moving on to Part 3, improving medium-term visibility. The securities reports highlight something absolutely crucial. Samsung isn't just relying on one trick anymore. They are gaining serious medium and long-term business visibility because multiple growth engines are firing up all at once. Step 1 is memory, supercharged by AI servers and that huge HBM acceleration we just talked about. Step 2 is Foundry, where they're finally locking in leading-edge process stability and eyeing some major customer wins. Step 3, system semiconductors, cracking open entirely new AI and automotive opportunities. And Step 4 is mobile, with premium products really padding out profitability. Samsung is morphing from a single-cycle company into a highly diversified, incredibly powerful semiconductor platform.
Let's dive into Part 4, Why Product Mix Matters. This is vital to understand.
Check out this number, 10%. Here's the crazy thing. A 10% jump in commodity DRAM pricing. It's nice, sure, but a 10% increase in HBM contribution, that is infinitely more valuable. Why? Because HBM is a premium product in a premium market. It carries vastly stronger profitability. So what does this all mean for you? It means the investor playbook for Samsung has completely changed. People are laser-focused on product mix now, rather than just looking at headline revenue growth. Back in the day, higher earnings mostly just meant traditional DRAM got more expensive. Looking ahead, it's these high-value products like HBM driving the bus. It's no longer a game of simply how many chips Samsung can shovel out the door. It's all about the advanced, highly lucrative nature of the specific chips they're selling.
Now let's look ahead to Part 5, Future Investment Scenarios.
The reports essentially map out three objective pathways for us. In the base case on the left, the general memory market keeps recovering, HBM contribution slowly creeps up, and we get a nice steady valuation improvement. But oh man, look at the bull case in the middle. If we see major HBM customer expansion, global AI infrastructure spending stays hot, and that foundry business turns around, we're looking at a rapidly vanishing structural discount and a potentially massive multiple re-rating. Now, to be fair, we do have to look at the risk case on the right. If they hit execution delays with HBM, competition gets too fierce, AI capital expenditures cool off, or the foundry keeps bleeding money, well, that re-rating could definitely stall out.
But distilling all these reports down, the bottom line is actually super straightforward. Samsung Electronics may be actively transitioning from a purely cyclical memory stock into a foundational AI semiconductor platform story. It's a complete paradigm shift. Investors used to buy Samsung strictly betting on a memory recovery. Now, the entire investment thesis is shifting to a new formula: HBM plus AI plus structural business transformation.
Which leaves us with one final, pretty massive question to chew on. As Samsung executes on its advanced memory and AI server infrastructure goals, will this structural business transformation officially trigger the beginning of a long-awaited, broader valuation re-rating cycle for the stock? I mean, looking at the data, the market certainly seems to think the pieces are falling right into place.
All right, I hope this explainer gave you a really clear, structured look at the changing dynamics behind Samsung Electronics. We will continue to introduce many stocks with upwardly revised target prices, so please subscribe, like, and set notifications to catch these opportunities even a second faster. Please support our channel so it can grow. Thank you so much for hanging out and learning with me today, and I'll catch you in the next explainer.